Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 7, 2022. Hope you're all doing well. What a tough market. Market has been dropping off of late. Let's take a look at high inflation investing and see which stocks can hold up the value and thrive during the high inflation environment. So we got one stock here, United Health. It's been doing well in the past high inflation environment. Let's take a look at stocks like United Health, which can do well during the high inflation environment. So with that, let's start with a quick market update. Look at high inflation investing and look at top ETFs by volume and look at stocks to invest during the high inflation environment. And finally, let's conclude. So with that, let's jump in and start with a quick market update. From a market update perspective, right now we're in the fear zone. So as we go from fear zone to extreme fear zone, that's when the money will come from the sidelines and pour into the market. Right now we are not quite there yet. I think we might come down some more. That's when money will come from sidelines and go into stock market, which will make the stock market go higher. So right now money is really trying to think through what to do, still in the sidelines. So with that, let's go in and jump into market update. Look, from a market update perspective, stocks could see some more downturn because bonds are going up, the yields are going higher, interest rates are going higher, high inflation, we got geopolitical tension, the China lockdown, so many things up in the air. That's why we could see stocks to go down next week. We'll keep a close watch on it. Pretty much it will be trading range. One day goes up, a couple days goes down. And look, stock keeps falling here. We had the jobs report. Jobs report was good. That can give some ammunition to Fed to increase the rates in a aggressive fashion. So we got to be careful here. Good news is bad news. Good jobs report means Fed can really take some action. Look, Chinese stocks look cheap here. We got to be careful on the Chinese names here. Probably we'll take a look at this in a different segment. We got to go after great Chinese stocks, not all of them at this time. And we got Nvidia here. They agreed to pay some fine to settle charges. We'll see how it goes. It's a good stock, but a high multiple or high valuation stock. And we got Zillow. Zillow falls big time here. It's a disappointing forecast. So let's keep a watch on Zillow and real estate stocks. And then you got high multiple names here, high valuation stocks, Cloudflare as well as Bill.com, both came down. That's what happens during the high inflation environment. Folks are not worried. Folks are worried about the future growth of companies and they want to see some profitability. That's why stocks like Cloudflare and Bill.com are coming down big time here because the market does not have patience for stocks like this with high multiples. All right, let's jump in here. Look at quick market update. Look, from a market update perspective, market does not know what to do. It's hostage to Feds and so many factors right now. So that's why, as you see here, nice trading range. Look, nice trading range here, lower side of the house here and the higher side. So market really does not know. It's a lacking direction here. That's why we got to be looking at strong stocks. If you want to be trading, look for bad days like Friday and buy some stocks slowly and accumulate. That's the best way to invest during this environment. If you're a short-term trader, look for 900, 500 point down days and buy some and hold on to it. And we got same story here. S&P 500 also, look here, it also came below its support level here. So that's why you got to be careful at these levels here. Buy on the huge down days and accumulate. That's a great way to invest. And same story, Nasdaq also broke down the support level here and came down. And Russell 2000 is again weak, as you can see here, came below the support level here. On the contrary, gold is holding up pretty well. Look, there's a nice holding up here. It's slightly above the support level here. Gold is a good hedge play. You could still buy some gold up here and you will do very well as a hedge play. Look, oil is going high mainly because there is a geopolitical tension and there is a lot of demand for the energy. That's why oil is going higher. Even up here on the down days, you could some buy oil and energy stocks. You will do well. Look, bond is a free fall here. As Fed is going to start selling the bonds, this can come further down here. That's causing the interest rate to go higher. Look, 10-year is going higher. That's telling you inflation is high. That's why interest rates are also going higher. This can have some impact on the real estate stocks because mortgage rates will also go higher. All right, let's jump in here and look at the long-term picture of S&P 500. We got a 5-year chart in S&P 500. Look, on a 5-year time frame here, market has done very well here. This is COVID-19 drop off here, and then we got here one more drop off in the works here. And also keep a watch on the skew. Skew is one of my favorite indicators that tells you when the market can drop off. Look, skew gave a heads up back in say last just before the COVID. Skew gave a heads up, hey, it's too high, market might drop off. That happened again. Skew was high here and market came down, as you can see here. So you got to be keeping a watch on skew. That typically tells you in a month or two in advance whether the market can come down. Right now, keep watching the skew level here. It's pretty much at a low level. When it reaches around 120, 125, you could start playing the long side of the house. You will do well. And also when the skew comes down like this around 125, 120, this is when you can start selling some put options and earn some premium, especially in the broad-based ETFs like SPY, QQQ, and so on and so forth. There is a good premium, and these broad-based ETFs, you don't have single stock risk. That's why a lot of investors play selling the put option game in the broad-based ETFs because it's a little more stabler than individual stocks. Look, VIX has jumped higher with all the uncertainty. I think we've got to keep a close watch here and go from there. All right, now let's jump in here and look at the monthly return in major ETFs. Look, stock market has been dropping off here. The Dow Jones Industrial Average down in April and down in May so far. As you can see here, April is a big down month here, and we got February and January both down months here. So that's why you got to be careful. As you can see here, trend is clearly down as of now here. We got almost say 3-4 months down. We are down year to date. S&P 500 also same story here. It's down since January. It's been in the sidelines here. March was a okay month, but look, January, February, April all down here. QQQ or Nasdaq 100, again same story here. Little more severe correction. Look at the drop off in April here. Big drop in April and followed up on the May, also big drop here. And then you got Russell. Russell is also weak, as you can see here. The small caps also down big time in April and also down big time in January. So you got to be careful here. When they're down big time, you could buy some quality stocks and hold on to them. And now what we'll do is to look at the weekly return to see what's going on at the weekly level. Look, on the weekly level, since past couple of weeks, look, S&P Dow Jones Industrial Average is down continuously. Like we got 6 weeks here. Since last 6 weeks, Dow Jones Industrial Average is down, and same story past 5 weeks or so. S&P 500 is down every week. So when this happens continuously, that's when I get optimistic and slowly start buying some great stocks with the deep pockets and a very good cash position and growth rate. You'll do very well. And look, we got here Nasdaq 100. It's also doing not great here. We got 5 weeks of continuous drop. At this time, you can be a little bit optimistic and slowly start buying QQQ or some great stocks here. IWM, similar story here. We got nice drop off here in last 3 weeks here, and even April again there is some drop off here. As you can see here, QQQ, IWM are a little more weaker candidates here. Dow Jones is again little stronger, but the trend is down. Look, trend is down in both all these major indices here. That's why you got to be careful here. You can also play the trend trading type game here and go after on the short side using options. We could take a look at that in a different segment. All right, now let's look at how to invest during the high inflation environment. So when the inflation is high, you got to look at areas like REIT and utilities. You could look at gold and silver, copper, and so on and so forth. Consumer staples, healthcare, one of my favorite sector, utilities and fine art, and so on and so forth. So these sectors will typically do well. On the other hand, the industrials, the growth names, think about Bill.com and Adobe and so on and so forth, and stocks with the no pricing power, they will typically go down here. We'll look at this in a little more detail. In a nutshell, go after profitable companies. Go after areas like say gold, that's a good hedge here, and silver. Go after consumer staple stocks. Healthcare is a great one. Health insurers like United Health, Anthem, and so on and so forth will do well. And utilities will do very well. We'll look at some of those stocks as we go forward. All right, now let's look at the sector performance. The reason I like to look at sector performance, it will try to give an indicator. It tells you what's in store in the future as you go forward. We get a good indication what's going on here. That's why I like to look at the trend, 1 month, 3 month, year to date, and 1 year trend. That kind of tells you what's going on here, what might happen. So that's why it's good to observe the trend and invest accordingly. Look from a trend perspective right now. Keep watching the 1 year trend here. From a 1 year perspective, we got consumer defensive and we got energy doing great here. Look, they're positive in 1 year. And then we got healthcare. Healthcare is also slightly positive in 1 year. And then we got real estate, slightly positive in 1 year time frame. And we got utilities. Look, utilities are up nicely in 1 year, and they're also up in 3 month and year to date. So once you look at 1 year, then you can look at year to date and see what's going on in the year to date. Clearly, energy is doing very well in the year to date. No surprise there. And then you got utilities trying to get some life back here. Utilities also doing great here. And then you can even look at a little more shorter term. Look, we are looking at 3 month right now. 3 month also, energy the top leader, as you can see here. But now see what's going on here. Utilities is gaining some strength when the energy is slightly down compared to year to date, but utilities is higher compared to year to date. That tells you utilities is gaining some strength. You could invest in the utilities. Then you can look at 1 month trend here. From a 1 month trend perspective, energy is still the strong leader, but you could also look at other areas like utilities and consumer defensive and also basic materials. And if you're a long-term investor, always invest in areas like technology, which will do very well. We got technology down big time here. You could invest for the long haul if you can take some short-term pain, and you could also go after healthcare, which is always evergreen. You will do very well in the long run. And you could look at other areas that we look at, and look consumer services here. Think about Facebook and Pinterest and so on and so forth, down big time. You could also invest for the long haul in these names, but understand there'll be some short-term pain here. All right, now let's jump in here and look at the year-to-date performance. So in the energy has been doing great of late. A lot of geopolitical tensions, as many of you know here. Russia's oil is getting some not so good demand here. That's why, look, stocks like ExxonMobil, it's a top performer year to date. XOM is the ticker symbol. We got Chevron doing great here, up 45% in year to date. And we got other players like ConocoPhillips, EOG, and so on and so forth. So on the down days when the energy is down, you could buy these names here. Even up here, stocks like ExxonMobil and one of my favorite, which is Chevron, and others, they will do very well. And I also love EOG, one of my favorite play here. You will do very well. So what I would do is really, we know, there is still a lot of demand for oil and energy. On the down days, you could invest in solid players like Chevron, like ExxonMobil. You will do very well. Can these go down? It can. If the war stops, Russian oil is available everywhere, then these can go down slightly. But the quality names like Chevron, ExxonMobil, they will continue to do very well. And you could also look at other names like COP and Devon Energy, one of my favorite. You could look at such names. You will do very well in the long term. These cycles will come and go, but quality stocks like these, they will do very well, even though there could be some short-term fluctuations. All right, now let's look at utility. Utility is one of my favorite segments, especially if you're a dividend investor. I think you should look at utilities, so that way you can keep on getting the dividends on a periodic basis. Look on the utility side, I think we should look at leaders here. Look, we got Dominion Energy, ticker symbol D, has done great year to date, pays good dividend. Duke is one of my solid plays here. They will also do very well. Southern SO is a great one. You could buy this one also here. And we got some more, as you can see here. And look, EXC is a good one here. Exelon, you could look at that one too. And we got a few more, all great ones here. You could take advantage and buy some utilities. You will do very well. So with that, let's jump in here and let's look at some more sectors. Now we are looking at technology. Look, technology is a bloodbath here. Microsoft down 18%. Google down 20%, Facebook or Meta down 39%, Cisco down 22%, and so on and so forth. So the picture is not rosy on the technology side, as you can see here, but I would even up here, I would slowly start buying some Microsoft and Google. And I know Apple is not here because it's in the consumer side of the house. It's also a great one to buy. You could also look at stocks like CRM or Salesforce.com. Adobe is a great one. If you can take some short-term pain, I suggest buy these names here. They will do very well, and you'll do very well long-term. But expect some short-term pain, because technology, once it bounces back, they will bounce back pretty hard. All right, let's jump in here and look at consumer non-durable stocks. Of late, these consumer non-durable stocks are doing well. Look, the old dogs are learning new tricks here. Coca-Cola up 9%, and Philip Morris tobacco names here. Tobacco is doing well here. Hershey, Yum Yum doing very well. Look here, and we got a few more names here like Hormel 6%. So as you can see here, some of these old dogs are learning new tricks here. Even when the rates are high, inflation is high, you got to buy your essentials and non-durables. That's why these will hold up very well. Look, we got General Mills, Tyson, even Kraft Heinz. They're all doing well in this high inflation environment because they got pricing power. They can pass on the high price to the consumer, like you and I. All right, now let's look at top ETFs and see what's going on here. By looking at top ETFs and how they're trending, you'll get some good idea what can trend higher going forward. So with that, these are the top ETFs. Keep watching here 1 day, 5 day, 6 month, and 1 year, and see what's going on here. As you can see here, some areas you can see some nice green here. Look, KRE, regional banks. Many of these banks have got a lot of deposit money, and as Feds raise the rates, they can earn more deposit or interest off of your money. That's why these regional banks are trending higher. Semiconductor, after getting battered down, they're showing some signs of life here. So at these levels, you could slowly buy some semiconductors. You'll do very well long term. Energy is a rock star here. Look, it's doing great consistently here. On the down days, you could buy some energy or XLE. You could also buy some Chevron and ExxonMobil and some of those names that we talked about. And look, we got a few more areas here. XLF, financials, after getting battered down big time, showing some strength here. You could buy some great financial stocks like Bank of America, Wells Fargo, Morgan Stanley, so on and so forth. And then you got industrial. Industrial is also showing some life here. You could look at some great industrial stocks like Caterpillar, Deere, and so on and so forth. Utilities, they're showing some life here. You could buy some great utilities as well as consumer staples. You will do very well. think about consumer staples area like Procter and Gamble as an example. And then you got a few more areas here. Look, oil is doing very well, as you can see here. Retail is down big time. And one of the best way to invest is look how these ETFs have been doing in 5-year, 10-year, and if they're up nicely in 5-year, 10-year, and if they're down big in, say, 5-day, 10-day, 1 month, 6 months, that's when you can invest in short-term great ETFs, but long-term great ETFs, short-term pain. That's when you can invest. That's one of the reasons I suggest even some of these QQQ as an example. Look, it's done great in the long term here. 10-year, look, 427% performance here, but short term, there is a lot of pain. That's why you could slowly start investing dollar cost average. There is no single stock risk. You could do same thing in SPY. That's also a great one here. And as you scan through, look, SMH semiconductor, same story, long term. Look, 10 years, 701% performance here. Short term, there is some pain. You could invest in such names here. You will do great. All right, now let's jump in here and look at top S&P 500 stocks year-to-date performance. Look, it's a lot of pain, as you can see here from a year-to-date performance perspective. Big multi-trillion-dollar company. Apple lost big. Microsoft also lost, as you can see here from a performance perspective. Google 20% drop. Amazon 31% drop. Looks like after new CEO Andy Jassy took over, Amazon is not doing great. There are a lot of troubles here, whereas Microsoft is gaining some strength in the cloud business. That's doing relatively better. We got Tesla down, as you can see here. And look on the positive side, look what's going on here. This is where you can get some idea on where to invest during the high inflation. Look, old dog, IBM up 3% or up 3% here. Berkshire Hathaway, our friend Warren Buffett, he typically does very well during the high inflation environment. Look, he's up 6.65%. And then you got some regional banks like MTB here, and some of these insurance players here, they are doing very well at these levels here. One of my favorites, Chubb, CB, that will do very well. And then got a few more in the healthcare areas. Look, Johnson & Johnson, Lilly, Merck, they all will do very well. So what you could do is really look at this trend here. If the sector is doing relatively well compared to other names like, see, Apple down, but Lilly is up, Merck is up, AbbVie is up, Bristol Myers up nicely. You could invest in such names on the down days. You will do very well. And then you got aerospace here. Look, there is a war going on here. That's why you got Raytheon, Lockheed Martin, Northrop, General Dynamics, even L3 Harris. They're all doing well here. You could take some Q here and go after the trend and buy slowly some of these quality stocks. And look, Boeing is down big time. If you think travel is going to go higher as you go forward, you could take advantage and be a contrarian and buy some Boeing. You will do very well long term. Look, energy doing very well. This is gangbusters, as you can see here. And I also like some of these names like ADM. That's a good one here. Archer Daniel Midlands ADM is a good one here. And you could look at some other names like Kellogg's, Kraft Heinz. They will also do very well. And keep the green here. We got here Merck doing very well. The medical device play here, Becton, BDX doing very well. Medtronic trying to go higher as we speak here. So you get an idea where you can invest here. Look, the Deere and Caterpillar also doing higher. So you can get an idea where to invest in. As you can see here, the trend is down in big technology names, and trend is up in areas like energy, healthcare, insurance plays, utilities, and so on and so forth. All right, now let's look at top healthcare stocks year-to-date performance. From a healthcare stock perspective, look, we got J&J up nicely year-to-date, Lilly up nicely year-to-date, AbbVie good performance, and we got other names like Merck doing very well, and we got Amgen, old dog is learning new trick here, and Bristol Myers up very nicely. This stock had been left for dead a while ago. It's coming back with a vengeance, and BDX Becton are doing great. So you get an idea here. You could look at those areas, and if you're a contrarian, you can look at great stocks like Thermo Fisher here and Danaher. They will do very well long term. And also I love stocks like Intuitive Surgical, ZTS for the long haul, even EW, Edward Life Sciences is a great one. You could, if you're a contrarian, you could pick up some of these great stocks which are down big time. You will do very well. All right, now let's jump in here and look at major ETFs, the yearly return, to get some idea on how to invest during the high inflation environment. Look, we got here the year up here. We got multiple all the way from 2022 to 1998. And look at the inflation rate here. In 2022, right now, we're in the high inflation environment, 8.5% inflation rate here. And back in 2007, we had a high inflation. And also keep watching Fed funds here. Fed funds rate went higher in 2018. That's when Fed aggressively started increasing the rates here. And as you look through 2018, you'll get a good idea here what went higher in 2018. Look, in 2018, S&P 500, QQQ, which is the technology, or NASDAQ, all went down here. On the positive side, XLY, that went higher in 2018. And we got XLV, healthcare went higher. That's why even up here, you could have healthcare going higher and XLV going higher. And then you got utilities. They will also typically do well during the high inflation. Back in 2018, utilities went higher. Gold pretty much held the value, as you can see here. So that's why you get a good idea. So if you are to invest during the high inflation environment, go after XLY and XLV, which is healthcare, and XLU, which is utilities, and gold can be good hedging play, as you can see here. All right, now you could also, technology also came down, but not too much. If you're a contrarian, you could go after technology, QQQ. You could also buy some SMH, which is down big time. That's what I typically do. I don't like to chase after the stocks going higher. Instead, I look at the good value and look at the bounce back candidates as a contrarian. Now I'm slowly picking up some SMH, QQQ, XLV, and even biotech ETF, and that will do very well. And then you got all the performance here. Keep watching. Even though some of these names like QQQ down big time right now, look at the historic performance. Historically, they've done outperformed the other names here. And same story, the broader ETF like SPY, even though it's down big time now, it's down 13%. Historically, it's done very well. So with that, I would, if you're a contrarian, go after these names which are down big time, and you will do very well long term as the market bounces back. All right, now let's jump in here and look at the top stocks to buy during the high inflation. So as you can see here, we got this list is sorted by market cap here. We got big dog, Apple, 800-pound gorilla. Look, we got market cap of $2.5 trillion. And then you got here 1 month performance and relative strength index. Almost many of these have got low RSI with few exceptions, as you can see here. And then you got valuation, both the PE ratio as well as PS ratio tells you what's a high valuation stock. You got to be a little bit careful in those names. And as you can see here, we got Morningstar ratings here, the financial growth profitability. So you can see what stock is really good and what does not, what's not great. And then finally you got here Ultman Z-Score, the industry standard when it comes to the financial stability of the company. And you could go after the better names here. Look, Toyota has got a little bit lower Ultman Z-Score, but stocks like Apple has nice high Ultman Z-Score, which is great. And then we got overall score here. Overall score looks at the profitability, valuation, the growth, margin. The higher the score, the better. So go after the stocks with nice and high score, you will do very well. And then finally, we got performance all the way from 2022 to 2007 in most cases. In some cases, we don't have all the way to that point. Maybe some companies are new. Maybe we don't have data in some cases. And pay close attention to 2018. 2018, like we talked about, was a high inflation environment. Keep watching what stocks have done well in 2018. Look, Microsoft. Microsoft is a light on the hardware side. They're a software play. They outperformed in 2018. I think even up here, if you can slowly start buying Microsoft, you will do very well. And then you got Amazon.com. Amazon.com has done well during the last inflation environment, but right now there is some leadership change. Looks like Microsoft is going after them big time with Microsoft Azure. That's why this time this is a little more having some pain. Amazon is having some pain, but if you're a long-term investor, you could buy some Amazon. But I love Microsoft better at these levels because Satya Nadella is really taking the company to the new highs, whereas Andy Jassy from Amazon.com is struggling with all these labor union issues and bunch of other issues he has to tackle. That's why Microsoft is a better play here. And then got a few more here. Look, Tesla has done well in the past, but Elon Musk has got a lot of things in his hand right now, including the Twitter distraction. So I would be a contrarian investor in Tesla here as it comes down big time. Look, it's down 17%. You could buy slowly, but Microsoft might fare better here. Tesla is a good long-term story here, but some short-term distraction in the Elon Musk's mind right now. And we got a few more things here. Look, United Health, one of my favorite stock here, health insurance company, has done great during the high inflation environment. Look, it's up 13% in 2018, which was a high inflation environment. You could even up here, look, RSI for UNH is 42. That tells you could even buy UNH up here also. And keep watching here. We got a few more with the nice performance here. Look, Visa. Visa has done well in the high inflation environment back in 2018. And I think Visa has been bottoming out here. You could buy some Visa here. As the travel comes back up here, Visa can go higher. Look, right now RSI is low here, 42. It's got nice Morningstar rating when it comes to growth, profitability, as well as financials. You could buy this great company here. And as you scan through here, look, we got one more right here, Procter and Gamble. This is a good one. High inflation, it did very well. At least it did positive. You could buy some Procter and Gamble. You got to buy your shampoo and soap, even though high inflation is there, and these folks can pass the high value to consumer. And we got a few more here. MasterCard, one of my favorite stock here. You could buy MasterCard as travel opens up. This can also do very well here. And we've got a few more here. Look, Eli Lilly, basically a pharma company. This is a great one to buy here. You could buy some Eli Lilly. Look, 2018, 37% performance. Off late right now, look, RSI is 56. It's doing pretty well even up here, but it's a great one to buy here. And we got a few more here. Look, we got Coca-Cola. Old dog is learning new trick here. That also had done 4% in 2018. You could slowly buy some Coke. Coca-Cola is also doing well. RSI is 54. On the down days, you could buy some Coke. And we got a few more names here. Look, Pfizer, again a healthcare name here, did very well in 2018, up 20% in 2018. Right now it's a big down. Look, RSI is 44. Tells the stock is sold off here. You could buy some Pfizer. And we got a few more, as you can see here. We got AbbVie. AbbVie is down slightly in 2018, as you can see here. So AbbVie is down 6%. It's a great one. You could buy some AbbVie also here. Then you got BHP Group, has done well. Right now, BHP Group is sold off here with the RSI of 37. You could buy some BHP Group here. You will do very well. All right, so we got list continuing here. It's market cap is in a descending order, as you can see here. Keep a watch on 2018 here. Look at the 1 ones that have done well in the high inflation environment, and go through some logic in your mind. For example, Merck had done well past 2018 environment here, high inflation. Right now Merck has got RSI 63. That tells you stock is up already, so I'll wait for some drop off and then buy Merck. And then you got your Costco, look, it's done well in high inflation environment. Right now, Costco, look, RSI down big time. That tells you Costco is sold off here. I would be a buyer of Costco here. You will do very well. And we got a few more names here. Look, Thermo Fisher, again, a great, it's done very well back in 2018 during the high inflation environment, up 16%. Right now, stock is getting clobbered. Look at the RSI 45. Stock is getting clobbered in the near term and down 6%, 6.9% in 1 month. You could buy this great company also here. And keep watch here. All these names which have done well, you could take a look at those. Look, Adobe here. Adobe has done well back in 2018 here, up 27%. But right now, Adobe is struggling. Look, RSI 39. If you're a long-term investor, you could buy some Adobe. You will do very well. And one of my favorite stock here, Danaher, up nicely, 12% in 2018. Right now it's struggling with a low RSI of 29 here. Sorry, 35 here. You could buy some Danaher and go from there. And if your stock has done well, look here, AMD, it's done great in past inflation environment, up 68%. Right now it's struggling. I think it went slightly higher after the earnings. You could buy AMD also after it drops off a little bit. They will do very well. And we got a few more names like McDonald's here. It also did very well. Some of these stocks will hold up the value nicely. McDonald's, they can pass the price of the burger to people like you and I, and they have the pricing power. All right, so we got a few more names. Look, list continues here. Keep a watch on 2018 performance here. And wherever you see some green here, those are the ones will do very well during the high inflation. We got here UNP, Union Pacific. The railroad company has done pretty okay back in 2018. Right now, stock is clobbered with the low RSI. You could buy some Union Pacific here. And we got a few more here. Look, next year energy. This is down up 12%. Right now, it's struggling. You could buy some next year energy also. Low RSI right now tells you it's sold off right now. And we got a few more names with nice performance. Look, ConocoPhillips and even Medtronics have done nicely during the past high inflation. And even Sanofi has done pretty okay here, 5% higher. Honeywell has done great, up. Honeywell is down actually, down 10%. And let's look at a few more here. Lowe's, looks like Lowe's has done well. You could buy some Lowe's. Right now it's struggling with a low RSI of 39. You could buy this one also. And we got a few more names here. Look, we got Anthem, health insurer, and Insurer has done nicely. Look, up 16%. You could buy some Anthem also here. SPGI, one of my favorite financial companies, up 1%. And right now it's struggling, as you can see here with the low RSI of 28. You could buy this for a bounce back candidate here. And we got, I think the list is almost over here. So with that, during the high inflation environment, invest in profitable companies which have got some pricing power. And if you're a wealth builder type person, when the stock market is down, buy some broad-based ETFs like SPY, QQQ, IWM, XLV, XLK, XLU, which is utilities, and SMH, which is semiconductors. This is one of the best way to build your portfolio. If you're a, maybe you have a 401k plan or IRA or a long-term investing account, you could buy these ETFs when the market is dropping off. This will help you to a dollar cost average because there is no single stock risk. You can confidently buy them at the market drops off, and then when market rebounds, you will do very well. And also look at the wealth builder stocks here. A contrarian play like Apple, Microsoft, Google, all down here. You could buy them at a nice price. And then you could look at the defensive names like Visa, Lilly, Abbott Labs, ADP, and so on and so forth. You will do very well. And you could look at stock like AMD, which is turning around right now after the quarterly earnings. Then you got great healthcare names here: Vertex, UNH, Pfizer, IBM. Old dog is learning new tricks here. They typically do well when the market drops off big time. You got a nice bank here, Wells Fargo. They can make money off of your deposit as Fed increase the rates. Then you got stocks like McDonald's, UNP, Anthem, which is a health insurer. These themes will do very well. So with that, thank you very much. Happy investing and trading. Please subscribe.